Markets have been red in the past 1 month, meaning that we have seen major dips in the stock market, especially in the international markets. This is the S&P 500 for the last 1 month. S&P 500 tracks the performance of top 500 companies in the Nasdaq. And if you see red in the S&P 500, it means that most stocks are also in the red. But you know what? This is the opportunity for us to buy. The markets have started to recover, as you can see here, and I think it's wise to get into the markets right now when the markets are still on the downside, so that you can ride the next wave. They say dips are golden opportunities or the perfect time to jump into the market if you have been on the fence. Remember, investing is not about timing the market perfectly, it's about time in the market. And because our strategy is all about dollar cost averaging, that means consistently adding money over time to just smooth out those ups and downs, I thought it would be a perfect time to add into my bags. We have been putting about 5,000 Kenya shillings per month into our portfolio, and this month we are focusing on ETFs to just build that long-term growth. Now, for those who are new to ETFs, if you don't have time or knowledge on how to research individual stocks and figure out which is going to perform well in the next maybe 1 year, 2 years, to 5 years, ETFs are a fantastic option for that matter. Now, an ETF or an exchange traded fund allows you to invest in a basket of shares through a single fund. It's like diversification on autopilot. You know how I keep on telling you that you should diversify your investment? Now you can actually diversify your investment in the stock market through an ETF. For example, the VOO ETF lets you invest in the top 500 companies in the United States. It holds stock that are tracked by the S&P 500 index. And what we are investing in today, that is QQQ, allows you to invest in the top 100 non-financial companies on the Nasdaq. And these companies are heavy on tech innovations or tech innovators. So the companies or firms that issue the ETFs select which ETF or which stocks to include in the particular fund. And this lineup can change over time depending on how the index or whatever the theme that they are tracking, how it is changing. So this ETF composition can also change. Let's take the S&P 500 index as an example. So it follows the performance of the top or the largest 500 US companies by the market cap. So if the composition for this index changes, also the companies have an option to change the composition of the ETF. So when you're investing in an ETF like VOO, it's like you're owning a small portion of each of those top 500 companies that are being tracked by that specific index. And this allows you to spread your risk and capture broad market growth. So speaking of ETFs, I would like to focus on four. First, the VOO, which tracks the S&P 500 and give you a broad exposure to the top 500 companies in the US. I think about stability and steady growth. The second one is QQQ, that is the Nasdaq 100 ETF, which is loaded with the tech giants like Apple, Microsoft, Nvidia, and the such. This is perfect for the innovation boost. And for the third one and the fourth one, I want to go to for something that is newer and has huge potential. I'm still researching on which ETFs to go with, but when I'm done, I'm going to be sharing it with you, but I'm going to go with something that is not the conventional ones that we know. We know of VOO, the QQQ, but now I want to go for different ETFs that are not in the mainstream. You know, those ones that are a bit volatile, but at the same time, they have a growth potential, okay? And before we proceed, I would like to remind you that this is for long term. This is a long-term investment. I mean, it is for years ahead, not for quick gains. So whatever I'm investing here is not for the next 3 months, 4 months. This is for years to come. And I'll be sharing with you my entire journey. I'll be sharing the wins, the lessons, the losses, and everything. If you're interested in joining me in this journey, and maybe building your own portfolio, we can still do this together. Make sure that you get the required accounts and you start this journey as we grow from here, okay? And also make sure that you hit that subscribe button so that you can be part of this community and you'll know when I'm sharing these things. Now, to make international investing accessible from here in Kenya, I'm using Scope Market. They are great for getting into the global stocks and ETFs without the hassle. I'll drop the sign up link in the description box as well as in the pinned comment. When you sign up, they're going to call you and they're going to take you through the whole process. It is super straightforward from account setting up to your first trade. For those who have joined Scope Market, please let us know in the comment section. Give us your feedback. How is the platform? For me, so far so good. If you want to join, click the link in the description box and sign up. The process is easy. Just sign up, fill in the documentation, and then they're going to call you to direct you on how to go about it. Now, before you get to the practical bit of this, a quick shout out. I had a bunch of you asking about fees and tax obligation when investing in the international stocks through Scope, and I hear you, and that's what exactly I'll be covering in my next video. Plus, I'm also doing some research in the 3 main platforms we have for investing in the international markets here in Kenya. That is the Scope Market, Hisa, and Ndovu. And I will be dropping a full comparison video soon. And we are going to be breaking down the fees, the pros, the cons, all of it, okay? So make sure that you subscribe and have those notifications on so that you don't miss out on that, all right? Let us get into the practical side now. I'll show you how I bought the QQQ and see how my portfolio is doing so far. Let's get into it. I thought I should share this before we go to the market so that you understand what kind of returns you're expecting when you invest in the ETFs, okay? This is how the S&P 500 has done over time. You can see over the years, it has always gone up. This is how the VOO has performed over time. And this is how the QQQ has performed over time. The good thing with ETFs, they tend to go up over the long term. Even though we have the dips, they always recover, and that's what I'm banking on. They say the average rate of return for the stock market is about 12%. That is counting the dips and the gains. But if you take profits at some point, it means that you're going to make more. Now, after signing up to Scope Market, you need to fund your account. For your information, as you can see here, I have 2 accounts, one for shares and one for Forex. I've not used the Forex one for a while now, but if you're interested in doing Forex, you can use Scope Market as your broker. They also have training sessions and meetings every day to show you possible trades for the day. If that is something that you're looking up for or you have been looking for, you can use a Scope Market. You can still sign up with the link that I have shared in the comment section. The pinned comment, that is, and also in the description. And when you get the call, because they're going to call you after signing up, you can tell them that you're interested in Forex trading. So back to shares, make sure you fund your account. You do so through M-Pesa or bank account. Withdraw is also through M-Pesa and bank account, so no worries there. After top up, it reflects immediately. So go to the trading platform and this is where you buy. So you can see here how my portfolio has been doing over time. I've been on the downside for a while now. For the whole of this month, I've lost some few coins, but I can see that we are recovering. And this was in most of my holdings. But of course, no worries because I'm here for the long term and I'm ready to wait for the markets to recover and gain more. Now for QQQ, I had already added it to my watch list. So all I need to do now is right click on it, then select new order. Here we will calculate the amount we want to invest, and we do this by dividing the amount of money that we are investing with the price of the particular ETF. So I'm going to be dividing 5,000 divided by 614, and I'm going to I got around 0.08 units, and that's to fractional shares. In this platform, we can buy that kind of fraction. We can do 0.08 of a particular share. So we key in this 0.08 here and we click on buy by market. And just like that, we have invested in QQQ. And now we wait for the market to do its thing, right? So this is the process of investing in the stock market, the international stock market. It's that. So if you're interested in investing in the Kenyan stock market, I have a guide here. You can get a copy of this guide. It's going to direct you on how to invest in the Kenyan stock market and also in the Kenyan ETFs, if that is something that you're interested in. So here is also a video I did on how to invest in the Kenyan ETF. So you can take a look and see what if it's something that will interest you. Thank you so much for watching. Happy investing. See you in our next video. Bye.